Alright, it's a quick video. What's going on? Okay, I'm going to switch gears a little bit and go into PNF and how to use it. Alright, and how to make it a part of your system. The first thing you need to know is where are you going? When the market is rallying, etc., you need to know where the market's going to rally to. If you don't know where the market's going to rally to, it will create uncertainty, and it'll create a gap in the way you approach things. So when the market is rallying, you need to know where the market can go to potentially, not only for for your own understanding of what's going on, but also for risk reward, right? So the thing is, before any rally, what do you typically get? You get consolidation. What is that consolidation? It is accumulation. So what do you do with accumulation? You can measure it. That's all it is. You're measuring the accumulation to see how far the rally goes. So you have accumulation here. How far is that rally going to go? And this is where I've been, you could bring in short-term and long-term PNF charts. The short-term is what you use for rallies. So this is a SPY one by one. And all you're doing is you're measuring the accumulation, right? So, for example, you go take the daily. So I'm taking a look at the left chart now, the daily. All right, where's the accumulation area? Obviously, it's in the pullbacks, right? Right there. It's in this pullback area, and you could further see this by taking a look at a short-term chart, and you'll see it's there. Like this, now bring it on a 5-minute or 3-minute, and you'll see. This is where all of the accumulation occurred. I forget that. Now let's just go to the 1-minute box. On the Renko, it's more because you have that 47 brick over here, right? So it's like, and he was pulling back. You have 16, 14. When it goes to 6 and 9, and reversed on this against a prior area of accumulation, the 70. So that's, and once it has that fall through bars, I mean, I knew that this was the accumulation brick. It reversed nicely on an increase of volume, etc., etc. And then, yeah, on the 5-minute and 3-minute or that type of chart, that really is only for entries. You should not be using that for analysis, in my opinion, because it's just the entry time frame. Anyway, so what does that pullback look? So you have that box on the daily. Now let's take a look at. I just do a count. So the count here is, one easy way of doing the count is look at the markup bar. You see a markup bar, and you take the base before it, and then just go back. All right, but I mean, the way you're supposed to do it, you're supposed to count the base, basically the support levels of support, or the lines of support. So I know from looking at the daily chart that these are the 2 points of support, and and this is the markup bar. So in the point figure, so right before that you have your last point of support. You draw it back and you project 33. The market tapped 33 cause. All right, the cause here is 33 boxes, and it has gone there. I mean, over here it's very clear. We tapped, I think it was 402. So at this level, what am I expecting? All right, first of all, you have to understand that it can go above 402, right, or below. This is a potential target, the key word being potential. So as it goes to that area, when it reaches that area, that now you start looking for things. Is it going to reaccumulate? Is it going to break? Is it going to continue higher? Is there a better line of support that I should use now to do a higher projection? These are the questions. the mistake is to take the short, and the bigger mistake is in your mind think that this is a magic level that the market is just going to go to and reverse. There's no such thing. It is just a potential saying that when comparing cause and effect, that the effect proportion to the cause is this much. But yes, it can go to 405. Oh yes, it could have only gone to 400. So this is it is like a high confidence estimate that the market has enough cause to go to this area, but it is not a magic level where it'll automatically reverse. All right, so it is where to look for changes and all of that. So as the market went here, what I saw immediately is this brick. You see this? This is the biggest brick in the whole wave. That's 65. Is biggest up break in biggest volume in 21 bricks. 21 bricks right there. Biggest volume in 21 bricks. So this is the target, right, or the effect, and look what's happening there. Now so I mean, this is climactic action. Now, and this is all happening at, this is current market. And if you want to take a look at how that looks on a lower time frame, just as you go there, you will see I think this was, I'm not sure which one it was, maybe I was using a 3-minute, but there was a climactic action. Should be this area. I had some climactic action there, I just can't find it now because I changed the periodicity. But anyway, you see things going on here. What are some of the things? This selling. You see, okay, there's some high volume here. There's some more. All of a sudden, there's some selling. It goes above that selling and goes right below it, taking out the low, going up, right above that area and cannot hold. Goes again, taking out the low. This has the feel of distribution, meaning go up only to bring it down. Sell, go up only to bring it down. Having some climactic action in the background. So there's a process going on here. All right. Now, does this mean you short here or anything like that? No, obviously not. You're trained to buy pullbacks, right? And one of the things you have to understand is, first of all, a change of behavior, right? In a downtrend, if you're going to buy the low, get ready for a spring. Meaning you can have like a change of behavior. But what happens is it's going to spring. Same thing in an uptrend. If you try to short after a change of behavior, it's going to do an upthrust. This is just, this is just what happens. So what are you supposed to do? Anyway, and what you're supposed to do is just take a look at two areas, because if you're a pullback trader, which as a Wyckoff trader, you're taught to buy pullbacks, you're looking at the halfway back area, blah, 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 but you could always have a profile that shows you and helps you identify the area or the level where you have two things. All right. And I'm going to explain basically when you're buying pullbacks, actually there's three things that you need to know. All right. The first, I don't want to take too much time here, but is your breakout area. Why? Because there's a test of creek, right? So, you know, markets tend to test the breakout test. The other thing is, a lot of times after the breakout, if there's not enough fall through, they're gonna pull back much more to the low bar. The bar that basically is typically the first big green bar that initiated the rally. On the Renko, on a bar chart, it'll be like the low bar, but on a Renko, it's going to be the accumulation brick, and that's going to be right here. It's basically the first, typically the best price that you can have gone into while the launch happened. And that's also the place to defend trend, which makes it very highly probable that the trades are going to work. I mean, I'll give you an example. I'll give you like, I don't know how many examples. This was the initial accumulation brick. Where'd the market go? Test the accumulation brick. I don't really see accumulation brick here. Why? It's low volume, so where did it go? The breakout brick. What did I do? To the breakout brick. Where's the breakout brick? Right there, the 61. You see that big 61? Test. So they have a tendency, again, this 70, where does it go? Oh, look at that, 70. Boom, tap. And now it's going to go again, and then the low bar, which is usually the accumulation brick, here's a 47, which is the biggest out of all the bricks that went up. Where does it come back to? Test the 47, tap, and go. So this is what it does. This is what the markets do. Why? Because that's where positions are being defended. That's all it is. Alright. So the other thing is, even the breakout bricks, typically if they have a lot of volume and there's not a lot of accumulation, then it might just test the breakout brick as it did here and went higher, and then later on tested the accumulation brick lower, which initiated a reaccumulation, and boom, it goes, right? So this is important to know this. So here what you see the breakout brick. It's right here. So where am I expecting it to go? Right there. What am I going to do? Go long. When it comes into that area and there's a change of behavior in the lower time frame, it's time to go. So what was it? The Renko and the profile, they help confirm one another. Profile by itself will not. I think there's a lot of mistakes. For example, if you have, I'm using it for a very specific reason, and that is confirming the Renko and the areas of where the market should defend. Whereas if you draw a profile over the whole thing or the entire chart, I mean, it's weird. I don't really see how that's going to help you, because it'll have a downtrend and an uptrend and range bound behavior in it, showing, I think, very weird type of, I don't see any rhyme or reason behind that. Here you are buying a pullback. Where do pullbacks go? They go to test the breakout, as well as a little bit lower to test the low bar. That's what they do. Why? Because that's the last place to defend trend, and that low bar is where the accumulation came from. So that's where they go to defend. Sellers take it there, and all that. The third thing you have to know is, typically when markets test breakouts, right? This is for breakouts. They have a tendency to do springs. Why? Because as the market tests the breakout, it also reaccumulates and then goes. So when a market tests the breakout, be careful because it might retest the breakout spring and go. I'm going to show an example of that. Here you have a breakout break. Market will tap, and there's ranging, meaning up, down, right? So when it does that, it's actually reaccumulating. When they're reaccumulating, there's a tendency to retest the breakout break and to spring it, and boom, it goes. So the pullbacks that test breakouts have a tendency to spring, and this shows you that clearly. It goes down, up, down, and then up. So here, when it comes to the breakout break, you don't just buy. You look for buying pressure and try to gauge that, and I know how to do that. Depending on that pressure, take a look at the pullbacks, because it'll give you a brick, but then it'll come back down and it's going to spring. So here, you want to be ready for not just the test, but examination of the test to see how much pressure it is. And if it's like mediocre, expect a little move up, maybe a brick or two, and market to come back down and spring this level. And on that spring, watch the lower time frame charts. Lower time frame, in my opinion, like if you're just using that, I don't know, I don't think you can make money. Because there's too many influences from higher time frames. There are too many influences from higher time frames to manipulate the direction. Meaning, if you're trading, I don't know, 5-minute or 3-minute by itself, it has influence from the 15-minute chart. It has influences from the half-hour chart. It's being influenced by the hourly chart, the 2 or 3 or 4-hour chart, and the daily. So the amount of noise will naturally be much more because of these influences. The lower the time frame, the increasing number of higher time frames above it, which means increasing amount of influence from traders that trade those higher time frames, whatever they're doing, buying breakouts, test the breakouts, pullbacks, buying moving average, pullbacks, VWAP, volume profile. All of those influences will create more and more noise. That's why lower time frames are always noisy, because no matter what you do, you have higher time frames, and in those higher time frames, you have traders, and what they're doing is always going to get reflected on lower and lower time frames, creating lots of noise. That's why you always start at the daily, and even with the daily, if you're looking for trend changes on the daily, you have to use the weekly and monthly probably, yeah. Because if you take a look at this daily, right? Well, I wasn't looking at the weekly, so I thought this was bearish, but if you take a look, somewhere back there was a weekly level, and all it did was spring that level. So that goes to show you, oh, right there. See this low? This low created that high, which took out the prior high. And if I paid attention, what I realized that the breakdown, all it did was spring this and reverse. So that's why, if you're looking at the daily, you should also be looking at the other higher time frame. Anytime you look at a time frame, the way it works is you should have let me write this down, an entry time frame, a level time frame above it, right? And then like a trend. This is basically a rally and pullback. Rally and pullback time frame. This also is also known as the reward. You can call it the trend time frame, the rally pull, where you look for rally pullbacks, and reward. This one here, level, it's usually a middle time frame that allows you to see what's going on in the rallies on the higher time frame. So the middle time frame, the MTF, is where you're looking for levels, and then the entry time frame is what you do at those levels. So it's always the coordination of 3 time frames. The trend, this for example, can be your daily time frame, which you have daily trend and daily rotation going up and down. Then you zoom in on levels by those pullbacks, and then use the entry to see what's going on at those levels so you can trade them. See what's going on here. So, for example, I'll put the example together. Here we have a rally. You have a breakout and you have a rally. Okay. So what are you going to do? It's the rally pullback, right? So you want to get in a pullback. Okay. So now, chopped up that daily swing into Renko bricks. You could also just use an hourly time frame, but 30-minute time frame, but Renko is superior in being able to identify levels. And then what you're doing here is identifying a level. What you do is you have a lot of volume up here because of climactic action. So just drag it back and it'll give you the level within the brick that you want. If you go too high up, it's going to show you the distribution. You want to see the breakout brick or the accumulation brick. Those are the 2 spots to look for at the levels. So now what you do is when it gets to those levels, you're going to go to the entry time frame and see what? You're going to see the change of behavior or the sign of strength using a wave chart. When you see that sign of strength, you can then identify a place to go long. But the best thing to do is see that sign of strength along with a higher high. That would help confirm that you're ready to go, and you enter it the same way, with taking a look at areas and levels, etc. It'll do fine. All right, so again, this is the 390s, the POC. Do I believe it's going to go there? It might with a spring, but I think that the first place to look around here. Is that like 390.50? Around 390.50. So we'll see how it reacts at 390.50. Or if it breaks it and then reverses hard with a change of behavior, then yeah, for me it's go time. All right, that's all, folks. Have a good day. Bye.